Okay, good morning, everyone. Welcome to When Catastrophe Hits. By a show of hands, how many people here like insurance companies? By a show of hands, how many people here have insurance policies? You've got a tough crowd. Okay, here's how we'd like to spend the next 45 minutes. I could probably put the microphone down, but just in case the people all the way in the back can't hear me. Each of us will introduce ourselves, and then in the interest of time, we're going to focus on 3 stages of an insurance policy's life. Creating the policy, when catastrophe hits, and then afterwards. And these 2 gentlemen are going to provide us with the inside scoop, advice, and things that we will say after something happens, say, oh, had I known. So they're here to tell us those things so that you'll know beforehand. And that's critical. My name is Lisa Fischman. I'm a managing director at Greystone. I pretty much just give away money. They're the insurance guys. We have, okay, we'll talk afterwards. Of the 2 gentlemen here, you really have no issue seeing Steve. You really never want to see Joseph, but they're both wonderful gentlemen. Steve, would you like to introduce yourself?
Sure. Hi, I'm Steve Auerbach. I am the claims director at P&G Brokerage. I've been there about 3.5 years. We are a full-service commercial brokerage servicing the healthcare industry, the real estate, the multifamily, construction industry, and others beyond that as well, of course. We have our CEO, Mr. Barry Pearlstein here, and some of my colleagues. And my day-to-day job is my team and I help our clients through the claims process. We do some work at the outset with clients who need to make sure their policies fit certain contractual requirements, or they have different questions about policy wording or their unique situations. So I do work with them as well. Day-to-day job is working through the claims process with our clients.
Thank you. Joseph?
Joseph Sabbagh, Maximum Insurance Adjusters. We're a full claims management company. We deal with when properties do sustain damages. We step in at that point, addressing, looking at policy, reviewing, walking our clients through that process. We deal on a national level for our clients, so where our clients are acquiring properties, we'll then get licensed in those states for them that we'll be able to service them. And then on the types of claims, it's more across the board of mainly commercial, student housing, multifamily, industrial, things of that nature that we'll step in and address those things. Been in the business now for about 16 plus years. We've handled somewhere of about $400 million worth of insurance claims on behalf of our clients, and been in the business for quite a while and enjoying it.
So in a nutshell, Steve drafts the policies, and Joseph's the guy that shows up after something happens to help you execute the policy allowances. Let's start with drafting the policy at the very beginning. So I own a building, or I own a whole bunch of buildings, and before I bought them, I'm getting insurance. I go for the gold standard. Help me with my deductibles question. Which way do I go, and what are some secret sauce pieces of advice you can share on how to protect yourself?
Sure. Well, certainly before we get to the deductible question, it helps to understand what you're buying and what you're not buying. To be clear, we don't draft the policies. The insurance company does that. We are the broker and help you find the best policy, the best provisions for your needs. Property policy is not liability coverage. It doesn't help if someone gets hurt. There are combination policies which will have liability and property. But a property policy itself is just to cover the actual physical structure, sometimes contents, but that's what it's for. It's not an equipment, it's not a maintenance program. It's not there if after 20 years the boiler is rusting through, that's not what it's for. There are probably companies out there that offer maintenance plans. That's not what this is. And it's also not flood coverage, which we'll talk about flood later. But property policy, it does cover a lot of ground, sometimes literally, in terms of the property itself, the the building, the components, the equipment. There is equipment coverage for when it gets hit by sudden perils, lightning or electric power surge, things like that. But that's what property coverage is for. It's certainly something that's required by any lender, any banks, anyone that has an interest in making sure that the property is maintained and can be restored back to its ongoing, hopefully, income-earning capacity. When you start getting into things like deductibles, obviously it's critical. It can be as low or as high within reason as you're willing to pay a premium for. If you want a $1,000 deductible and with millions in coverage, you may be able to get that, but it's going to cost you quite a bit. There are higher deductibles that, and the higher you go, obviously to a degree, the premium will keep coming down, but then you have to think about what happens when catastrophe hits. So deductibles are an important part of it. There are options for high deductibles and buy down. There are like mini policies, so to speak, that you can buy that will if you pay a small premium for those will pay down the deductible to a large extent if there is a situation. So those are one option to look at.
So you can get an insurance policy on your deductible.
Correct.
Remember that. That's a good one. Instead of having to pay the deductible, if you pay for a smaller policy, your deductible is covered, or a portion of it is.
Correct.
Okay, so that's a good piece of advice. Let's say I'm about to buy a new asset, and there were claims with the previous owner. What questions do I need to ask before I go forward with a purchase and sale agreement about those claims or about the policy that the person had and how it's going to impact me?
Well, obviously, the first step is to know that there's claims on there. It's not necessarily something a seller will volunteer, and that's why it's important to get as good a loss history as you can on the policy, on the property. That may involve getting loss runs from them. If those are the best indicators. If you can get their policy information, which they should be able to provide, the current policy, a broker or carriers can look back at the history of claims on the property, certainly if there's anything ongoing. If there is a claim on the property, if there's been damage, if it's in the process of being rebuilt, that's something to know about. And everything's contract-based. You can work that into the contract. If you know that they're walking away with the money and you're going to stuck with the repairs, if you know in advance, that something can be worked into the contract. After the fact, it gets much tougher.
Joseph, you have a couple of examples of that?
Sure.
Nightmares?
Where a client is looking at a property they're looking to acquire. They look at the loss runs, and they see that there is damages on those properties of certain dates. That's really going to give you some insight to when that happened, what repairs were done. And you can even get a little deeper, really requesting from them their estimates and looking at that and saying, okay, how does that play out with the property itself? And where this really goes to is on my end of it, when you do have a claim, God forbid, the insurance company is going to go back, even though they might not be the insurance company that was on the insuring that property at the time. They have a history of that property. So they're going to come back and say, well, back 10 years ago, this property sustained X, Y, and Z. Based on the documentation we have, only 50% of the repairs were done. We are not paying for those repairs now. And that can really put you in a position as an owner and an operator of where, hey, we're now going to have to come up with that money. And sometimes that could be hundreds of thousands of dollars. So we have seen that, where that has happened, where we're going through the loss runs, we're seeing that there's a claim, and at that point, addressing it hopefully up front, so at least they know what they're getting involved in, and not finding out after the fact once the loss occurs.
So basically, the previous owner received the money and did not do all the repairs and walked away with the money, and then when the incident happens again, the new owner can't submit a claim because funds were given at a previous time to cover those repairs.
Right. So the claim can, and more on that, is the claim can be submitted because there are going to be things that most likely the previous owner did to the property, or else you would have noticed it walking the site itself and seeing, hey, there's all these damages here. So some repairs were done. The question is, to what extent were they done, and what did the insurance company pay out?
Okay, I'm just going to say, because of the size of the group, if there are any questions at any point regarding anything that's being discussed up here, feel free to raise a flag, and happy to have you interject. Okay, we'll call this stage, God forbid. If a catastrophe happens, I own my building, what do I do first? What's the order?
So the order typically is going to be is you want to first look at of securing the property. And I say this to people, if there's a fire, of course, you're calling the fire department. If there's water damage, you want to find out where to shut off the water, not let it run for a day and a half. At that point, it's really then notifying the agent and putting them on notice that a loss has occurred at the property. The agent at that point will ask a slew of different questions to make sure that the loss is going to be filed correctly. And I usually use this as an example. A burst pipe on the 10th floor, your average owner is going to look at it and say, that's a flood. Well, then the agent might be saying, hey, wait a second, flood from what? So knowing where the damages are occurring from and what's causing them will help. Documenting, I think, is really crucial on this. Taking pictures once you've stopped whatever it is that's causing the damage. Once the insurance company has been notified, getting a mitigation company out there to really secure the property and protect it from further damages. And then at that point, moving forward in that process.
What do I not do?
That's a very good question. This sometimes happens. Go ahead and do all the repairs to the property, put everything back, and then call up the insurance company and say, hey, we have an insurance claim, and they show up and everything's been done. Now you haven't given them the opportunity to look at the loss. They can actually turn around and deny your claim for that. So what I always suggest to our clients is get the property mitigated, protected from any further damage. Before repairs get started, make sure that the insurance company has assessed the property. If the carrier is saying to actually go ahead and do repairs to the property, make sure you get it in writing, because a verbal suggestion from the insurance company is not going to fly later on when that adjuster comes out and says, well, we didn't authorize that, and so on and so forth. So I would really say don't do all the repairs. Mitigate it, get out the damaged items that are going to further damage the property, and then wait for the insurance company to get out there to assess it.
And document. Pictures, videos.
Yep. These days it's very cheap to do that. Back in the day you had to use film and get it developed.
Right, and it helps that the taking pictures now with cameras, with phones rather, or even iPads, et cetera, can usually get it. The metadata will have it time-stamped down to the minute, so that's helpful to show that this is not historical. This is a new damage. The other thing to keep in mind, even before talking to the carrier, I know we've discussed, is do you report it at all? Which is a question to be thought about. Certainly at a lower level damage, if you're talking with $5,000 deductible and you've got a couple thousand in claims, obviously it's a no-brainer. We would certainly advise them every time, do not report this, even if it's 1,000 or 2 over that. But when we start talking about larger magnitudes, it becomes more of a discussion, sometimes bigger picture in terms of what does this mean going forward? What does it mean about, will this affect my premium? Or my renewal premium is almost every case, that's the question that comes up. And the answer is maybe. And if there's things that, at renewal, if there's an increase, our producers will do their best with the carriers to fight them tooth and nail to say this doesn't apply, it doesn't require or justify an increase. But sometimes it will. Certainly if the carrier thinks this is something that can happen again. I know Joseph has some situations where, at a much larger stage, where it does not pay to bring it in. And I don't know if you want to talk about that.
Sure. We've had where some clients of ours, have sustained hurricane damage to the property. 28 buildings, all the roofs got damaged. Well, when we ran the numbers of what it's going to cost to replace it, and then looked at their deductible, we suggested to our client not to file that claim. When we ran just dealing with the roof system itself was about $1.2, $1.3 million. Their deductible was $950,000. So at that point, and they were coming up on their renewals. That can definitely affect their premium. So looking at that and saying, hey, our suggestion is that's not a claim that you might want to file because of these reasons, and allow them to make that decision at that point.
And when you go out there, on the flip side, you might see, okay, the roofs are damaged, but there's additional damage that when you walk the roof, that is more than the 1.2. So it's not just the wind damage that removed the roof, but there could be additional damage interior to the building that could actually be even more expensive. So that's where you come in and do the assessment.
Correct, and that sometimes happens of where they're looking just at the exterior of the building and not really focusing on the interior. What effect did it have on the interior, and how does that play out working through the policy and saying, okay, we have actual structural damages. What are our loss rents now going to be because of that? How many units are going to be down because of that? What are we looking at that point? So looking at all of that and taking in a full scope of what's happening really does help with helping our clients make that decision and moving forward.
So when we spoke earlier, we talked about renter's insurance and how having a policy for the whole building actually benefits from your tenants all having a renter's insurance policy, and sometimes the owner will actually have a policy for all the renters and making it easier for their tenants. What happens if you have a situation like that and the incident starts in an apartment and then impacts the common areas? So who points a finger to who first?
So in a situation like that, we would have the client would file under their policy, their property policy, and then allow for them to subrogate against their master policy for the tenants. And the reason that is that the main policy, that's what we call who's on first, is really going to have way more coverages for the insured, in this case being the landlord, to actually go ahead and collect under the policy. It also allows for the insurance company to subrogate against them and collect their money that they're entitled to. It also puts it of where you're giving them the right to say, hey, you pay me, and you go now fight it out with the tenant's insurance, and allows for things to move a little bit quicker.
Right. And at the same time, at the tail end of the process, when you see a loss reflected because of this loss on the owner's policy, say, wait, this is being subrogated. Loss is not our loss, and that should not be counted against any kind of renewal premium.
Correct, and I've actually seen that. It's a very good point, Steve, where we've gone back and say, hey, this was actually subrogated, they were made whole, and then it was taken off of the loss runs, or it did reduce their premiums based on that because it wasn't their fault.
So I have a client who, after we'd done a significant amount of rehab and brand new everything, and somebody on the top floor of a mid-rise fell asleep with a cigarette in their hand. And everybody was safe and fine, but the fire department had a really fun day with that incident, and the fire was put out, but the water damage was extensive through the whole building. So it was affordable, and it was seniors, and they had to move all the residents out until all the work was redone, and it was months before they were able to move back in. How does that fit? I'm assuming stage one, when we're drafting the policy, these are things that owners may not think about. How do you handle something like that? Is that a rider? Is that something that's that owners should consider? Is that an expensive piece? How am I going to cover moving residents out? You need to have secure people to empty their apartments and licensed folks that are not going to steal and get them set up somewhere else. How do I handle that as an owner?
Well, from the outset, you want to make sure the policy has sufficient, or what you consider, and the bank considers sufficient business interruption coverage. And then there's extra expense, because it's not lost income, the cost to get them moved out, especially with seniors and the extra expense on that. But there is coverage for that, and you have to think about what may it cost. You don't want to think worst case scenario, but think 80% to worst case scenario in terms of how much you want to invest in the extra coverage for that. And in terms of seeing it put into practice, I think Joseph says as well.
Yeah. On that end of it, really, when it comes to dealing with that, we tell our clients there's going to be expenses possibly under the policy may not be covered. Kind of look at what your property is and determining, hey, what am I going to need? Such as an example in the case of if it's a nursing facility, well, at that point, you're going to need to move all those patients out of the facility. What is that going to cost? It doesn't go into business interruption, or what they call BI, because it's that your loss hasn't yet started. The loss has started, but the moving part of it will not be part of that. The extra expense portion of the policy will afford coverage for that. Sometimes it will say it's a portion of coverage A, sometimes it's going to say that it's a set dollar amount. Knowing that up front is really crucial. We've had clients of ours that have spent at least $100,000 moving patients out of facilities in Texas after the freeze that just happened. And we're still working through with the insurance company with regards to coverage on that. And that was an out-of-pocket expense. They had no choice but to move them. And that's not even taking into account yet their business losses, which are in the millions, and the property damages, which were in the millions. So it's kind of where they're already what we call bleeding that money out, and that's a concern for them also. How are we going to get that back?
So,
Just curious, if you're insuring that they actually maintain proper ranges of insurance and tenants and multiple, is it what you say it's extra to still have coverage for moving tenants out? Because I know that they also have in the multifamily setting, where even though it's not your responsibility, there's extra coverages for moving, packing out,
so does individual renters insurance cover that? And then would you have to, or is that's a separate rider on that?
It's double coverage, meaning it's not necessary, or you say it's still better than that because it's all in one thing, you don't have to look and smart.
Right. Certainly, I suppose if there's a master policy, if that it's when you're talking about an en masse, it's not one apartment that's burnt out. There, if it's a multiple, then yeah, I mean, it pays. It's certainly taken into account what the individual policies, renters policies will provide, but there is also a larger building-wide expense that goes into moving out, and that in terms of utilities and other things, and then setting them up somewhere else. Where certainly if you're putting them all into one new place, or if they're being scattered into different places, there are extra expenses associated with that no renter's policy will cover for any individual renter.
What I found on dealing with multifamily, especially student housing, things of that nature, a lot of those policies are not going to cover that. What they're going to turn around and saying that is the personal items of the tenant, and sometimes will actually exclude it. There are situations of saying, hey, to address the damaged areas, we need to get access. So at that point, we would say, okay, then look to the policy to find out for those extra expenses and figuring out how to factor that in. Now, what happens is also sometimes you'll see on the policy, it's going to say contents coverage. So looking at the definition of what the policy defines as contents coverage, even though it's not part of the tenant, it's the tenant's contents, we might be able to get that addressed under it also in that situation. So it really does depend on the policy. I know a lot of people always ask, oh, it should be straightforward. It's not. Yes.
Who does the insurance agent actually work for? Does he work for the owner of the property, or does he work for the insurance company?
Agents, there are carriers that have their own kind of fleet of in-house agents. P&G, for example, and many of our colleagues in the industry are not. We work for the client, and it gives us the freedom to go to different carriers to see whatever makes sense. And we may even split up coverage, part with one, part with another, whatever makes the most sense for the client.
Second part of the question, what is the responsibility of the agent vis-a-vis a large claim? Like, we had a building, 180 apartments, ready to TCO. A young man came in and burned my building and 3 other buildings to the ground. It's a $40 million claim, and we have proper coverage. But is the agent more responsible than to say, you need to hire a claims adjuster? Where does he play in to help solve? It's been, by the way, this is December, in 2 years, we haven't resolved the claim. When, aside from collecting premiums, what else does he do?
Right. So at a base.
I don't mean to put you on the dime, but
No.
this is the reality.
I know, and that's my job. I mean, and many brokerages do not necessarily have someone, and will say, "Here's the number for your carrier. You're welcome to call them." We do our best to hold their hands through the process. Now, when it comes to the tech, and you're talking about millions in losses, the adjuster is really going to be the best person who can get in there. I can get them come out to your buildings. I'm still not going to be able to know that, well, these joists and that water system and all that is, that's really, it's going to be millions more than the carrier is saying. That's something the public adjuster is uniquely trained to do. From our end, we fight for the coverage side. We make sure if they're saying a provision does not apply, we say it does. I'm currently fighting with actually it's a liability policy on an event policy where the event was canceled last minute and the producer was out hundreds of thousands of dollars. They didn't get property coverage. It's not their property. They had a liability policy, and so liability had one unique provision in there where if you rent something for less than 7 days, we'll cover losses that you incur. So we do our best. We rip apart the policies that we have with us. We'll do our best on that, but when it comes to the actual technical side that's out at the property, that's really something that the public adjuster is really your best person for.
And Joe, to that point,
Yeah.
Joseph is the independent appraiser who's able to go in, and he's paid by you. So
Right.
the direct answer is you.
Is there any justification to the building was worth 50 2 years ago? Now it's worth 75. If you rebuild it, we want a depreciation or a lesser payment because the building you're going to put back has additional value because of the market. Is there justification?
It's really a pretty specific question. We'll have to look. No, I understand.
So, no, not at all. So I'm going to explain that. With regards to when it comes to, it depends on the type of policy you've purchased, whether it's an actual cash value policy or an RCV policy, which is called a replacement cost value policy. That will then, with that also, the valuation that was done was based on the computer models that the insurance company used at that time to assess what it would cost to rebuild that structure. Not the value of the property, it's the actual construction cost. And right now, these days, actually, it's a really major, big problem because we'll settle a claim today. By the time you get the contractor ready to start going to do the work, it's 30 days out. These days, with the construction material, prices are fluctuating all over the place. So numbers that are being proposed by an insurance company, what I always tell our clients is we have to look at that to see what is being proposed, first of all, for the rebuild. Does the policy cover that? Meaning, do you have in there law and ordinance coverage? Which means that if you're going to rebuild that property today, you now have to build it to code. And does the policy cover for that? A lot of times the policy...
I think that's the question to say.
Yeah.
If actually they didn't want to diminish the payment based on the future value of the asset.
We would have to look to the co-insurance under the policy to see what co-insurance was purchased, if there was any, and how the insurance company is coming up with that evaluation. Sometimes they have their method of doing it and bringing in, and that's why they're in business at the end of the day also. They're looking at it through their lens, where I always tell our clients, get a second opinion from a public adjuster to kind of determine, are they correct on their interpretation? And sometimes they are. Sometimes, for whatever reason, the coverages that were being offered or were not ever asked for, and then after the fact now, we're trying to put the pieces back together to figure out what has happened. We have situations currently even where the insurance company is basing the valuation of the property based on the square footage. And one of the things in the policy was detached structures. It doesn't say that it's excluded, but the way that they ran the numbers included those detached structures. We're now fighting it out with the insurance company to include those as part of the policy and as part of the coverage. And we're working through that process. So really looking at it and saying, hey, it's sometimes not so simple on when they're coming back and saying this is the reason. They might be looking at it incorrectly, or they might be looking at it correctly, getting that second opinion. Now, I am going to comment something I think is important. You said a moment ago, you're coming up on almost 2 years. Depending on where that policy was issued, my suggestion is to make sure that you're not running on the statute of limitations. What happens is sometimes an insurance company is going to run the clock, and there's a reason behind that. They delay, and then at the 11th hour, notify you, now you've given up your right to litigate against them with regards to certain portions. Okay.
I litigated the first day.
Good. So as long as you're in litigation, right? No. So that's important because when you're dealing with that, sometimes what happens is the clock is running and the carriers are going to look at it differently. Now, getting that valuation of where they're coming from, I would go back to the attorneys that are representing you and find out where are they coming up with that, And is it really in the policy?
Well, it's not even an issue for now.
Yeah, sure.
It's an issue of that the attorneys that represent us, wow, but thank God they're a lot for me. They do a lot, but they're saying the precedent they're trying to set, we would have to go to the court and get a ruling on the precedent, which would take 2 years or more. What they're eventually looking to do is kick the can down the road, but because we're paying a mortgage, and we'll pay it as long as they're going to pay it. They're going to pay it eventually. I can pay the interest for whatever. But
Right.
that's not even the issue. But the precedent they're trying to put forward doesn't exist. And to get it overruled, either a local judgment, he said that we would have to go to court and get a judge to say that is not a precedent that's covered under any insurance, that you can diminish the claim based on the future value of the building. That's what they're trying to say.
So-
They're saying, well, you claim really, when you rebuild this building, you're gonna make 25 million.
Well, what you make on it, and we won a case out of Georgia, actually, where the insurance company went ahead, it was a multi-million-dollar loss on this property. The carrier went out, assessed the value, agreed to the value, wrote up an estimate for it, and then decided that they're going to deny the claim. We ended up in litigation. Our suggestion to our client was they received a offer to sell the property as is, and that they were able to maintain the insurance rights. At that point, they sold off the property. We went to court, and the insurance company was arguing, hey, you were made whole under the sale. Why do we have to pay you anything? And the attorney argued, where in America does it say you're not allowed to make a profit? And we won. Our client got a $3.4 million settlement in court. So that was in Georgia. So looking at, I'm sorry? It was about 4 years ago. And it's, so looking at some of the case law out there, I think is really going to help with how to, and I'm not an attorney, so I want to be clear about that, but we'll look at case law because the insurance company, they do that. They look at it and say, hey, their interpretation is this, your interpretation is that. They're going to litigate it, and sometimes going that route. Now, one of the things I'm going to say is, the law firm handling it should have the steam behind them that's needed to push forward till the end. Because sometimes the carrier doesn't want to go that route. And there might be another 150 cases that are behind yours that are identical, and that's why the insurance company wants to litigate it. Because if they win, they don't have to pay the other 150 that they're holding out on. If they lose, then they're going to have to pay those 150. So it's really an internal thing that sometimes, you're going to have to go that full route. We've been in litigation sometimes for 7 years with some of our clients' claims. I hope no one ever gets to that point. It was a great settlement, but yes.
So while we're still in the recovery stage,
Sure.
do you want to touch on flood insurance and what to know, what not to know, or what to do, what not to do? I know that I deal with that all the time with HUD-insured loans, looking at the FEMA maps, where is my ingress, where is my egress. We've done tremendous LOMAs all the time, changing, I know it's an acronym and I should spell it out, changing the map. The FEMA map, because the waterways do change, but there's a difference between waterways and flood zones and floodplains and 100-year and 500-year. What advice can you give property owners to protect them before, during, and after a situation?
Well, I'll start the process, but as I said early on, property insurance is not flood insurance. It can often be added on, but it does need to be separately written and rated and paid for. Flood zones are a large part of that. Even if a building is not, a flood doesn't necessarily just mean ocean or river overflowing. It's water that's at ground level, or sometimes I guess even below ground level, that enters from, it could be from a storm, it may not be. Those who are in the New York area, certainly New York City area during Hurricane Ida, know that the sewer system in most of the city could not handle this sudden deluge of rain, flooded up, and then came down and went back up through sewers, the sewers and drains in many properties. So that's flood. That too is flood. Although many of our clients do have sewer and drain backup coverage, which brings up the point, as we said earlier, know exactly what the claim is about. When we were getting calls and thinking we were flooded, we're like, well, we're not submitting it to the carrier saying you're flooded. We need to know what happened, and it's if it came up through the sewers and drains, that's a very different story than if it's a flood. Assuming we do need and are purchasing flood coverage, again, the flood zones are a huge factor. We have been successful in arguing, and it takes some time with the carriers to either reduce or to argue this is not in a flood zone or the flood zones have shifted. Those are important. This can make tremendous differences. If it's, I know my colleague Musha Wax has gotten something down from flood zone 25 down to 11. It saved tens of thousands of dollars on premium. So that's important from the outset. Once you're in a flood situation, there are ways to mitigate it, but you need to know what you're doing.
Once the loss has occurred, unfortunately, can't go back and amend those policies. So knowing up front what we're dealing with is really important. And a lot of our clients will look at those policies and figure out, okay, you have a policy that says on it, your regular standard commercial policy will say we'll cover up to $1 million of flood damage. But when you get to page 148, it's going to define how they're going to cover that. And I always tell my clients, especially these days of what's going on up in New York, New Jersey, and some of the other states because of Ida, where that's an excess policy. So whether you purchase the NFIP policy or not, you're still now stuck surpassing that number before the excess policy even starts to pay. So as an example, under the NFIP policy, let's say on a commercial standard is about $500,000. Your standard commercial policy has a $25,000 deductible. They're not going to start paying until you surpass that $525,000 amount, and then they'll kick in and start paying under the flood portion of it. That's one thing. The other thing is, in a lot of, especially up in the Northeast, it's basements. Well, under the NFIP policy, majority of that is excluded. Anything below grade, and literally a step down, and this happens even in Florida here, where we're having with some of our clients that are on beachfront, where the way that they designed the building is a step down, and then into the lobby, and then you'll have the elevator shaft and everything else and mechanical stuff below that. Well, because that's below grade, there's no coverage under the NFIP policy because they exclude it. So now you're stuck in a situation of where you purchased a policy that will not cover, one. Two, you have an excess policy that will not cover. So knowing up front and really making sure.
What are the odds you're going to have a flood in a basement?
These days, you know, it's interesting. Ever since Hurricane Sandy, or they call it Superstorm Sandy, Hurricane Sandy, we really got to see what was going on across the country when it came to these flood policies, and how much of it really the federal government pushed back on, and they've kind of now put their policies where it created, actually, and I'm going to stop for that, it created a separate market of private flood insurance. And I suggest to my clients, if you're able to purchase that, go out and get that, because you don't have to worry about the below grade issue. You don't have to worry about only paying for the actual damage and not the continuous and so on and so forth, which NFIP policies will limit. So that's a little bit, sure.
Whose responsibility is it to report a change in elevations established by FEMA? You write a policy, your elevation of your first floor is 100. FEMA comes in and they remap the area midway in the year. Now you're in a flood, or you weren't. Whose responsibility if there's a claim? Well, you weren't in a floodplain, but FEMA map says now you are in a floodplain. Whose responsibility is to report it to the insurance carrier, or is it their responsibility to keep current with the flood maps?
So there's two parts. I'm going to let Steve answer in 1 second, but on my end of it, because you mentioned about once there's a claim. So if a claim happened and the NFIP remapped everything, or the federal government in that case has remapped, then at that point you're going to be in that position of dealing with what they've done. The agent typically, and Steve will now comment on that part, of how that should really be looked at beforehand. And having a good agent on hand is really important. I've seen them do some interesting stuff on their end when it comes to rezoning those flood maps for some of their clients.
Right. Well, certainly if it's being remapped mid-policy year, at the next policy year, obviously at the renewal, you're talking with a new reality. If you've got a policy that says they'll provide coverage for your policy based on these rates and this amount, we'd argue tooth and nail that just because the FEMA has now remapped it, right now this is a policy is a contract. You've contractually bound to this for this year. renewal, we'll talk about a new map, we can we'll fight it over then. But for right now, for a claim now, we would certainly argue that coverage still applies as written initially.
So if it's remapped during the course of that policy, you're not naturally informed. FEMA does not update all the insurance carriers that there's a change to the map?
Well, FEMA, I'm sure they notify the carriers. Agencies and brokerages will get the information. We're certainly not going to get from the carriers mid-year how this new rezoning has suddenly affected each one of their policies that they've issued to the hundreds of thousands of different policies.
So then that falls
insurance.
to the owner. It's the owner's loss potentially if they end up being in a zone.
Potentially, as I said, we would certainly argue that the rezoning should not impact a given claim during the current policy year.
Correct. And even on a claims perspective, if they're coming back and saying, oh, well, that, it's been redrawn, we're going to try to find out when that was, and argue with the carrier at that point and saying, no, your interpretation is incorrect because at the time of binding the policy, they paid X, Y, and Z based on that. And a lot of our cases actually ended up in Sandy, ended up in litigation over that, where some of those.
And
things
who
happened.
won?
We won because the reason why we
Good.
won went a little bit deeper than that.
For the owners, right? When you
Yeah.
say we, okay.
Yeah.
Sorry, Steve.
Well, in that case, the agents were really left, and kind of comment on that for a second. Up in New York after Sandy, the agents were really put in a position that was not really fair to them when it came to how the NFIP decided to address those claims. And what happened at the top level, because NFIP is overseen by FEMA, the head of FEMA had to step down and give up his job. Certain engineers went to prison over it. Certain insurance companies lost. It was a domino effect of what they were doing, unfortunately, behind the scenes. And this was the federal government to make up a deficit from Katrina, but that's a separate story for another time. But our cases actually, overnight, they settled everything that we were asking for, and any other clients that were out there at that point.
Well, that's a good way to end this the session
Yeah.
with a positive experience. Any final comments or thoughts or advice, or just don't ever forget when a policy is being drawn. They'll be here all day, tomorrow, tonight, I think through today.
Through
If
tonight.
you have any questions.
Yeah, I mean, as I said, it's much easier to address things before the claim. And that's obviously at the time of writing. And even if there's things that's done before the claim during the policy year, it gets exponentially harder, but that's our job to help to get what you can.
And on our end, as a public adjuster, I always tell our clients, call us before a claim happens, because we look at it on a claims perspective. We're looking at it and saying, hey, based on the property you have.
After the incident, but before the claim.
No, even before the incident happens, a lot of times we'll say, if you're going into binding a new policy, sometimes it helps because you're going out there to purchase the insurance, but you're not, you're hoping you're never going to have to use it. But wouldn't it be better to know up front, hey, these are the type of things that I'm going to be exposed to, and how do I kind of minimize that or get it covered correctly? So it's one of the things we
To look at their buildings, their portfolio from a different perspective, things that they may not see.
Correct.
Office equipment, things like that, that it's like, oh, never knew that would be, that should be considered in the policy.
or even vacancy provisions. A lot of times, especially these days, because of COVID, what we saw is a lot of buildings or properties are starting to become, a certain amount of them are vacant. Well, notifying the agent of that is really crucial, because the agent can then go out there and possibly get even a vacancy permit, which means that the carrier is now put on notice that, hey, we know this building is not fully occupied, and we're not going to use that against you, and at least you'll have certain coverages there in place, and they can't, raise arguments of saying, hey, the building was vacant X percentage and so on and so forth. So knowing that kind of through that process, I think is, in our suggestion, is important.
Thank you. Any other questions? Okay.
No, that was easy.
Wonderful. Thank you, everyone, for
Thank
being
you so
here.
much.
Thank you all.
And